Good evening, good afternoon, whenever you are. This is another part of the Become the cTrader Master webinar. And today we are going to talk about the scalping and everything which is connected with the scalping techniques. So we are going to take a look at some different charts, some different strategies, different approaches to the scalping. So bear with me one moment and we are going to jump right into it. All right, I hope that everyone connected to our webinar. So we are ready to start. We are going to start, of course, with the definition of the scalping. What is scalping? What does it mean to scalp the markets? Scalping is very often considered to be the activity when you open the trades and close the trades many times in one day or in one trading sessions. What's the difference between trading um, using scalping techniques and trading as a day trader, for example? Well, the difference is that the day trader can have a one position open from the beginning of the trading day to the end of the trading day, and he doesn't leave this position overnight. So he goes to bed with clear head. Basically, he's not worried about what will be the outcome of his position when he wakes up next day and start the trading platform, basically, right? So that's the day trader approach to trading. Scalpers, however, are quite different. The first thing is that, of course, they don't leave the trades overnight, but the time horizon for scalpers is way lower. Usually, scalpers use very low time frames, like 1 minute or even lower. And using, for example, this kind of a movement, you can see here on the 1 minute chart of the euro dollar, scalpers can do a lot. And they are trying to use all of these trading opportunities that they have um, on the markets. So basically, what they do is they open and close positions multiple times during the day. Multiple times means even hundreds positions a day: 20, 30, 77, 89, 127. It depends, of course, but generally the advantage of the scalper over the other market participants is that they can jump in and jump out very quickly without moving the market in some sort of the direction. All right, so basically scalpers doesn't trade on not that much liquid markets, or they don't trade during the limited liquidity situation or time periods during the trading session. Okay, so the amount of trades the scalpers use is sometimes overwhelming. As I said, 20, 40, 70 trades a day. It's nothing new. And of course, not every one of this trade, not every single one is profitable. The absolute the secret using this trading technique is that to keep the, of course, losses to the minimum, to the bare minimum, and keep the profits to fly high as much as it is possible. So that's the key difference, to be honest, between the scalpers and, for example, the day traders. I don't even want to mention the long-term traders, because that's completely different approach to trading, completely different time horizon. So as you can see, I have put the 1 minute chart on the euro dollar. And what do we know so far is that the 1 minute chart is a very low time frame, and euro dollar is one of the most traded pair on the forex market, if not the most traded pair on the forex market. And as you can see here, there's plenty of the opportunities here that can give you plenty of the trading signals when you are using the scalpers techniques. This movement here alone, for example, from the lows here at the level of 1.0742 to 1.07, this is 65, would give you at least 25 pips, and that's only like this is let's say it's not even, yeah, it's 1 hour basically. So the scalpers can take the advantage of this situation here, and they can trade the low time frame charts using a very very important advantage, which is to come in quickly and come out quickly. How they do it? With the cTrader, we got something which is called quick trade, and the quick trade allows you to do very very nice things very very quickly when you are a scalper. Of course, using this tool must be predefined, and I will show you in a minute how it is to predefine this tool. But first, I'm going to open the sell order. The reason I have opened the sell order, if you want some kind of a rationale, if is that if you take a look here on the horizontal line, you can see that we just took off this high from. Let me just take a look. This is the high from. I think it's not from today. No, this is from. Oh no, it is from today. It's 7 years, 7 hours old. It's a 7 hours old swing high, and I want to trade it accordingly. For example, I expect double top around this level. Of course, I might be wrong. I might not be. I might not be right. It might be completely different pattern that the market is doing right now. But nevertheless, I have opened one mini lot on the euro dollar. As you can see, there is not a problem for me because right now my pip value is $1 and the trade value is 10,768 dollars. I have paid 27 cents commissions, and margin required to open this position is only 21.53 dollars. I still have, even on that small account, some margin available. Now, in order to use this let's say this quick trade panel, which is very very often used by the scalpers, I needed to predefine some things here in the quick trade panel. As you can see, my take profit is automatically placed, and if I will make it smaller, you can see that the stop loss has been placed as well. And if you just look at this situation here, you can see that the stop loss is apparently maybe take profit is twice as much bigger as the stop loss, which means I'm using 2 to 1 risk to reward ratio. Now you ask, how do I do it for my scalping techniques in order to have it predefined, so I don't have to input it every time I'm scalping, because there is no time for it very very often, right? Especially if you use multiple markets. So you go to settings. It is down here. You go to settings. You go to quick trade, and as you can see, you can obviously set how many clicks you need to open a trade. I'm using single click. So I need only one click and the trade is open. And there is all the type settings. As you can see, I got market order, stop order, limit order. All I need to do is to predefine. So as you can see, in my market order, my stop loss is placed 10 pips from my entry, and my take profit is placed 20 pips from my entry. I can even use the trailing stop if I want to. For the stop order, it's 15 pips stop loss and 15 pips take profit, and for the limit order is the same. I can change it anytime I want. Right now it's deactivated because I care the most about the situation when I'm doing the market, when I'm placing the market order. But if I want to change it, there's not a problem with this. Of course, I can change it to any kind of a setting I want. But what I especially pay attention to is the risk to reward ratio and the position sizing in order to control my risk exposure. So what I mean by this is when I'm hovering around this menu here, I can have the context menu I've shown you right now, and you can see that right now my position is 1 mini lot, which means that the pip value, every pip is $1 for me. It's quite big. It's quite big position for me to handle because my stop loss is only it's only, let's say, 10 pips away. So when I go to the trade watch panel, I can see clearly that right now when the market moved 4 pips higher, I'm losing already $4, and my account is 160. So it's not very, let's say, very good risk to reward ratio for a scalper. However, I want to close this deal as soon as the desired take profit or stop loss level is hit. So I'm not worried at all because I'm always using this kind of a this kind of a order, the protection order, basically, yeah, because that's really what it is, to be honest. Now, I'm trading only one market, which means that I can, for example, increase my exposure to this market a little bit more than usual, because usually I do like a 1 to 2% per trade. Right now, it's a little bit way than more than 2%. However, I'm trading only one market. If I would have trade, let's say, two markets, 3 or 5, I would have to, of course, divide this zero point 0.1 lot size, 1 mini lot, into smaller pieces. For example, I could use 10 times less, which is one micro lot. So using the micro lot, for example, from this level here would likely result in a completely different risk to reward ratio, and I could easily move my take profits and stop loss even below the recent swing lows. Okay, so and of course the take profit, let's say it stays the same. So I'm managing my risk, but I want to gain as much as I can from every of my trade. Now let's just take a look how the situation looks like on a 3 minute market, because as you can see here on a 1 minute market, you can have one perspective, but it's very important to see the other perspective as well. And as you can see clearly, placing the stop loss above this swings high is perfectly rational, and placing the take profit below this swing low is perfectly irrational, because this stop loss is a little bit too close to the market. So I've just moved my take profit. I've just moved my stop loss, and for now, of course, I need to move my other take profit. There you go. So both of them. Let me just for the mm, uh, for you guys to see it clearly. Let me just move it even a little bit lower than usual. Now, when you're this is my setting of the risk to reward. You will have another setting of risk to reward. Possibly you will have different position sizing, you will have different risk to reward ratio, for example, because you are not ready to do this the way I'm doing. But as you can see here, is scalpers very often place the take profits and stop losses just above the major swing low and swing high, and as you can see, it's perfectly clear for me to place and move my stop losses and take profit a little bit away from the current levels. Okay, so that's one of the way you can do scalping. You can of course change the different let's say different chart. Let's say I will switch my chart right now to tick chart, and the tick chart is of course a little bit different than the 1 minute or 2 minute chart, because tick chart shows you on how many trades is being made during I mean, there is no time, of course, but how many trades is being made. For example, right now I'm waiting for 10 trade to be made, and the outcome is of course okay, some sort of a bar or a candle, and this using this kind of a chart can make you can give you different perspective, different point of view on your trades and on the behaving of on the market behavior as well. As you can see, I'm using 10 ticks chart, and it's clear as the sun that this market just keeps going up, keeps going up. Even if I will zoom out even more, you can see almost the same situation that we had on the Japanese candlestick chart. Nevertheless, the scalpers are using this chart even to trade after 5 or 10 ticks. If they are in their favor, then don't actually wait for the some kind of a certain level to be hit. They just wait for a certain amount of trades to be made on the market for them, and that's enough for them to close the trade on profit and on loss. It depends. Okay, so right now I'm willing to add one more trade, one more short trade. As you can see, it's all predefined. So I'm willing to risk a little bit more. This trade was, of course, the smallest amount. As you can see, one micro lot, which might not be that much impressive here. Nevertheless, it should be uh, quite good for my let's say for my strategy. I'm managing my risk still. There is nothing wrong here. Nothing is going on with my account, so I can add one more order to my list. Okay. The other situation with the scalpers, if they trade more than one market, very often, for example, they look at the market which is directly correlated with the euro dollar. For example, they look at the US dollar index, and at the same time they look at S&P 500. As you can see, the US dollar index is right now the usual chart, of on our Japanese candlesticks, and the US 500, which is S&P 500, right now is the candlestick as well. Let me just switch to okay, it's a 1 hour. Okay, so maybe we'll just zoom out. Yeah, so basically, um, euro dollar is on the daily highs most likely, and the S&P 500 is on the daily highs, which means that the dollar is not in favor for the markets. As you can see, the dollar is going down. Everything is intercorrelated here with these free charts. So very often the scalpers are using the different markets to confirm their view on the current situation they see on the one chart, in order to see whether the situation on one chart is connected somehow with the other markets, or it's only in their heads. It's only something that they see, which is actually very typical for some kind of currency. So for now, you can clearly see that all of these markets are interconnected. The S&P 500 is trying to get on the daily highs. US dollar index is trying to bounce from the daily lows, and euro dollar on the tick chart, okay, because I prefer this one right now, is doing some nice pullback from the highs. And apparently I could even open another sell order whatsoever. Two previous sell orders are um, in a profit already. So that's another way the scalpers do. They manage the exposure on a different markets, and they look at the internal intercorrelations on the different markets. So if I'm short on the euro dollar, I should be long on the let's say I should be long on the US dollar index, and I should be um, short on the S&P 500 as well. So let me just do another. There you go. It's 1.01. So let me just do the 10 contracts, maybe a little bit. Okay, so that's 10 contracts. Let me do 50 contracts. I will do 50 contracts and I will sell straight on from here. So as you can see, my current situation is limited to three markets that are very liquid, these markets are very popular among the traders. So mm, I shouldn't have any problems with liquidity, with coming in, coming out. I have the opportunity to let's say to challenge my point of view on one market with the different markets if they are interconnected, for example. And as you can see, I'm doing this the scalpers way. So I have a few open orders, and I'm willing to add even more if they are going if the trades are going in my direction. So as you can see, I'm not overusing the leverage. I'm not over trading. I'm waiting for the opportunity to get into the markets, and I'm trying to use even the small time frames. Let's say I will try to use right now the 5 minute time frame on the US 500 and the 5 minute time frame on the US dollar, because I want to see whether these two guys are doing what I want them to do. Some pretty nice reversal candles here. Maybe my situation is not that bad. I can add even one more trade here on the US dollar, for example. My trade here looks not that bad. However, it maybe this market is not really that much, let's say, liquid. Nevertheless, I will still use this one, the US dollar market, for to keep it for the references. And I think I'm going to add maybe 1.05 lots again on the euro dollar. It's looking very good for me. So basically, this is how the daily activity of the scalper looks like. So it doesn't mean that he opens the scalpers doesn't open the trades because they are bored, or because they have to, or because they need to be in trade to make money. They have as a scalper, they have the strategies, predefined strategy, predefined exit and entry and exit points, predefined trading style. And of course, they must be very, very well disciplined, and they need to know a lot about the market microstructure and the intercorrelations of the particular markets. For example, if I will add to my platform the chart of the gold. As you can see, this is a daily time frame chart. Sorry, hourly, 1 hour time frame chart of the gold, and the gold is coming off. Sorry, this is not gold. This is silver. Let me just find out the gold. That was there you go. This is the gold. And you can see it straight on that the gold is again coming off very, very, very nice level, which was the all-time high, 2,130 something, I guess it was. And today, if we zoom out, we can clearly see that this gold is on the lows, which means that people are not actually doing a lot trades to buy the gold. They prefer to have the US dollar, and they prefer to apparently invest in S&P 500. But the S&P 500 actually is trying to move lower, and the US dollar is trying to move lower, which means that my trade on the gold might not be that much necessary, because this market is not aligned today with the overall flows of the market. So let me just add a different market. It will be the crude oil. And the crude oil is denominated in US dollars. So as you can see, this is a 1 hour time frame of the crude oil, and there is a potential for some kind of engulfing pattern here. So maybe we will go to the lower time frame. Let's say we will go to the 5 minute time frame and take a look how is this market doing. The gold market, of course, right? So is there any connection of the crude oil with S&P 500 and US dollar and euro dollar? Not that big as you might think. The crude oil is much more connected with, of course, with the US dollar there is, but it's much more connected with the Australian dollar, New Zealand dollar, and the commodity currencies, basically. But for now, I'm not seeing any setup on a crude oil. I'm not willing to open the transaction just because I have to. Maybe with the breakout of this level here, this is a 5 minute chart. Maybe with the breakout of 71.15, I would consider having another let's say, no, not another, but but first sell order. For now, I'm not interested in the crude oil. So as a scalper, you need to know which market to choose, which market can potentially bring you some sort of the trading possibilities. Sometimes it's not worth to find the current trend, even in the micro trend, in micro scale. Sometimes it's better to take a look around once again and maybe build something later than just get into the trade without having any significant trade setup and a signal of this market. And this is what every scalpers uh, should be focused on, right? So not trending randomly, because it's very tempting to open yet one trade, yet another trade. But when the markets is turning around, it's very important to get out of the trade as soon as possible in order to avoid damaging your trading account. So that was my webinar about the scalping and the scalping techniques. I hope that I give you a nice introduction to this trading activity. Maybe it will fit your style. Maybe you will build your trading strategy around it. I wish you well using this trading strategy. It can lead to the very nice profits, very uh, explosive profits, even if you know how to use it right. Of course, as you can see, I'm using only price action. There is no indicator here. I got some volume indicator, but I got rid of it. I'm just using different charts, different point of views. I'm using the different market correlations, different and I have my own point of view of the current money flow and market sentiment on the different assets. So this is the core of my strategy as a scalper. Of course, you might have your own. Strongly encourage you to develop your own trading style, to develop your own strategy, to develop your own point of view. But always remember to manage the risk, and always remember to not to try to overexpose yourself and overuse the leverage every time you open the position. Always use a stop loss, and always use the take profit as well, because sometimes the market might jump in a split of the second, and your take profit might be apparently hit, so you will make the money automatically. That's everything from me for today. Thank you very much for participating in this webinar. Thank you very much for listening to me. I hope this was very informative for you, and I hope we will see each other next time. For now, take care and bye bye.